We have Wendy Jeffson at the end, who is the co-founder and chief behavioural scientist at Cybernetics, sorry. We have Salvador Garcia, who is the co-CEO and co-founder of Behaviour. And we have Stuart Roberts, who's the executive vice president and CFO of iZettle. Welcome. So let me just start by asking the audience a question, which is in terms of data analytics and consumer behaviour, specifically around innovation, where are people on their journey? Are people at the start of the journey? So if you're at the start of the journey, do you want to put your hands up? Just a few people. And if you're sort of more mature in your thinking, a little bit further down the end, roughly the same. So there's an awful lot of people in the middle, I guess, that's what it says, or not bothered, one or the other. Okay. So let me try and inspire, I guess, a little bit of inspiration. Maybe I can ask the panel in terms of some of the exciting things they're doing currently in this field of data analytics. Wendy, do you want to kick off?
Yeah, sure. So at Cybernetics, our big goal is to understand and improve human decision-making with technology. And our first suite of products is in FinTech, looking at financial decision-making, using the data that already exists in the system to help people make better decisions with technology, but also be more compliant, so understand actually how those decisions are made and monitor them and surveil them efficiently and effectively. And that really it's a new way of using data that's been collected for many years to get new value out of that data. There's certain challenges that we'll come on to discuss of how do you get at the data in the right shape and ask the right questions of it. I would put it as the industry is at an early stage in getting value out of that data.
So what's in it for the consumer, Stuart?
Well, for the consumer, I mean, at iZettle, we have this grey zone between consumers and small business owners because our target market is small business. And we're offering payment systems to these guys and girls across Europe. And so when we look at a consumer, it's someone who is either a customer of our customer or it's someone that's running their own business as a standalone. And I think that the question of what's in it for them is really whether or not they can get value out of their own data. Whether we can provide them insight which they find useful. We can provide them loads of information, but actually the more simple they are in their approach, and I think this is something that a lot of the industry gets wrong, thinks that consumers and in our case small business owners, they want to be data scientists in their own right. They don't. They want to see something tangible. So we pick about 5% of the information we've got and share it with people if they like it. And if they don't like it, then they either go somewhere else or they tell us. So it's, at the moment, most of the answers are confusion. Okay. They're confused as to where do we get the information from and why should it be useful to them. So definitely for them, big data is a scary word, not a value-added word, I think.
So I want to come back to that. Maybe just let me go on to Ivory itself. So Salvador, what's your views? What are you doing that's interesting?
So at Ivory, we help small and medium-sized enterprises when they are trading globally. So we are specialized on the cross-border finance. So our products are around international payments, foreign exchange contracts, and also import loans. And over the last 7 years, since the company was established, we've been building up our product capabilities, and also building up our distribution. And we use data on both sides. We use data on the distribution, and we start with lead scoring to understand what are the clients that have the propensity to buy our products, and also have the propensity of us selling their products because they have the right creditworthiness, and also use data all throughout the sales funnel until the retention and reactivation engines. And we also use data in the product build-up because we want to build digital finance products or beautiful products. In the end of the day, it's just about immediacy and convenience, and to be faster at things, we leverage data. It's about how you build your credit models to do approval rates faster.
Okay, so what's in it then for the shareholder or the employee, just to take a different angle? Wendy, do you want to have a go at that?
It comes down to what's already been said, actually, that it's got to give you value in your day, whether you're a consumer on the street. I mean, we're all consumers in work as well of products. It's got to help the job that you do, make it smarter, faster, easier, more informed in some way. So any product is only as good as what the user can get out of it. And I think I would agree wholeheartedly that we can provide all sorts of data slicing to say to a fund manager to give them feedback on how they're making decisions. But they're busy And actually, you've probably got a 5-minute window before they're getting into their news flow meeting in the morning. So you have to give them something meaningful that they can take action with and will want to come back and keep using if they're going to keep using the product at all. So you've really got to understand how somebody's going to use something, what value it's going to give them, why would they want to keep coming back to use it, what are they going to get out of it ultimately, otherwise there will be no value and it's a waste of money and a huge amount of time.
Okay. So Stuart, you touched on, I guess, some of the challenges, and I think you sort of were going down to looking at potentially a trust issue with the consumer. So perhaps you can sort of cover off some of the barriers and challenges in terms of implementing effective data analytics strategies.
Well, you've got to set out the end game, I think. If you just go into data for the sake of it, then you know, it's going to be a large black hole. But to set out the end game, I mean, we started off initially trying to make a journey easier for our customers, and that wasn't the product, that was actually getting hold of the service. So things such as identity checking, customer checking, and the rest all feels very intrusive if you do it in any traditional manner. And we want to get a similar quality of data, but we want it to be quicker and less intrusive. And so you've got to break down that first point of trust to get access to that data. So you know, we can take all the traditional records. If you sign off and say, yeah, you can do a credit check on me, that's fine. You've got to be fairly committed to what you want if you're signing that off already. And those are some of the larger barriers. So put those large barriers at the front. You don't want people following a difficult journey that gets more difficult because they'll drop out later and they'll feel a degree of anger at having been taken through the early stages. So if you've got a big hurdle, put it in at the front end. Face up to the facts that you've got to solve that before you can then make the journey easy afterwards. And so, you know, we're checking, as I said, you check someone's credit records, you can check a bank account, but what about seeing if they are who they are? What about checking their Facebook profile? How many friends have they got? When was the last time they posted? What about Twitter? What about Instagram? And we're taking multiple triangulations of these sources. And whilst I know that we look after that data suitably, I'm not sure if people realise that they're getting, you know, this sort of data is being used for those sorts of purposes. That could create a new trust issue that goes out there.
Salvador, what about you? What's some of the other barriers?
I think that probably, as Stuart was saying, one of the key barriers is having the data. So I think that probably these days you have the computational power and you have the models to really make the algorithms learn. But it's about finding the right data and understanding the problem that you want to solve with data. Those are probably the key barriers for any business that wants to leverage data. And once you find the data, you go into data ownership. So who is owning that data and who has to share that data? I think that's also very relevant these days with PSD2 coming and how banks are being forced to share the data. So who else should be sharing their data as well?
Yeah. Wendy, how much data is enough data?
It depends on the question you're asking. But I mean, actually, just building on Salvador's point there, actually, in terms of data and how things are changing in financial services, going forward, the regulators are really helping in the UK. With MiFID II coming, they're requiring everybody to put their data in the same shape. So that's kind of a first for the whole industry. They're also requiring it to go into the cloud. So they're really shifting how people are going to be dealing with data going forward and the cleanliness of that data. So they've just signed a 6-year deal with a company called Syria to build that cloud platform for them to do analytics on it. So they're really actually shifting the ground on how data, one, the shape it's got to be in, and how it's going to be managed going forward, which also includes the trust issue. So we're now seeing a lot of our clients, well, the FCA is requiring it going into the cloud. Okay, so perhaps we should be considering cloud. And I think one of the banks has just appointed their first chief cloud officer. So there's a lot around historical data and trying to clean up that, if you want to use it, largely wasn't collected in the first place for the kind of purposes that people are trying to analyse it for now. Going forward, I think it will get easier, certainly in the shape that it's in, or being required to be in by the regulators.
Yeah, I think one of the things I think Atom are doing, which is interesting, is our philosophy is to take the minimum amount of data at any one stage. And actually that's sort of in line with regulation. You shouldn't be taking data unless you've got a specific person for it. But we do offer choices. So for example, in our business lending, we have a tool that can scrape your business accounts straight off your accounting platforms, whether that's Sage or Xero or any of the popular packages. But we don't enforce it. It's up to you. You know, if you want to open that up, you can do. If you give us that data, we can make decisions much, much quicker and more accurately. But it's a choice thing. So we constantly allow it to be a choice, whether you're a business or consumer, in terms of what data you give us. And I think that sort of works in terms of that trust angle again. I think it's important to build that
So
trust.
the choice thing is key. I mean, from a behavioural science perspective, it's all about motivation. And there's a study which I can remember the details of, but when they asked what was the value to somebody, how much were they willing to, what do they think their data was worth in the US? And it was something like $4.69 because they wanted something back for it. It all depends on, what's it going to be used for? There's a big concern about Big Brother watching you, but actually if it's going to be, if I could use the same data, if a fund manager, same data, make more money, okay, yeah, you can look at everything I've got. So it really comes down to that choice and the motivation and how you're going to deal as an organisation with the data and being transparent about how you're using it.
Okay, so let's move on a little bit. I mean, there's a huge amount of innovation generally in the fintech space, and a lot of this is helping, I guess, enhance data analytics and understanding consumer behaviour and looking at how we leverage consumer behaviour in terms of our products. So maybe, Stuart, can you kick off in terms of CEO? What's the innovations you're seeing that's either helping or changing the landscape?
Well, I think the connection between fintech and other parts of our daily lives is where the opportunity really lies. I mean, how exciting is the up and down of a particular fund or an investment, unless it's your own investment. It's got a limited data set already there. So the sorts of things that we're involved in and we see others involved in is expanding the data set to connect financial transactions to other core data. So, looking at, sponsored by Barclays today, Barclaycard, who touch 55% of all of the card transactions that you or I do in the UK today somehow or some way. Still missing, they don't know what it is you bought. They know where you bought it, and they know how much you spent. We've just acquired a point-of-sale company up in Scotland, actually, a software, cloud-based software company. And along with our own payment system, we now see every product that someone sells using our platform, and we see the identifier of the card payment of the individual that's bought it. So we can blend those two together and make suggestions to the retailers to what they want to present to that customer next time they come in, as soon as we can see that customer, to say, well, you bought a coffee last Thursday, but you also bought a cookie. Would you like to buy another cookie today? And so it's connecting these things together. And I think that innovation doesn't have too many bounds, but I think there's a critical point around it. When he was talking about the behavioural elements of consumer, is when do you cross the line between something which people feel is valuable and something which people feel is invasive? So if we send an electronic receipt, that's fine. The consumer likes it. They want to take that. They can have a printed receipt or electronic receipt. If we then send a message laterally saying, you bought this item, do you want to buy another one? They want to have the choice as to whether they hear that message or not. And then there's another profile where, whilst we're looking at companies and the amount of data that we're getting access to, we've got that cloud hanging over us of Big Brother. So in our space in particular, there were comments only last month about a 2020 move in the UK to have all sellers report their transactions on a daily, weekly or monthly basis. No hiding of cash transactions under the till. If you're in London, you should now be able to pay by card if you're in a black cab. But the machines still don't work all the time. They're still quite happy to take me to an ATM from time to time. Why is that? Well, it is actually about data. And that's going to hold certain things back because the connections are just not on the surface right now. And we have staff every day who take more data than we can handle and try and pick between the two to identify what data is causal and what data is correlative. Because it's very easy to have more correlative data that really means nothing. It shows you two things moving in the same direction, but they're not caused by each other. And I think that the innovation is going to be for us to find a way of using machine learning to make that task easier rather than human to make that task question, which is what we use at the moment.
So I think you just touched on something that's, I think, really apt at the moment, machine learning, artificial intelligence. How is that changing, I guess, the data analytics environment? Salvador, do you want to go?
Yeah, so I think that if you think on data, clearly the big innovations is that now computational power is very easy to access to everyone, and also machine learning algorithms, very sophisticated algorithms, are very accessible to everyone as well. So that is given every company, big or small, the tools that they need to really leverage the data. And then it's about what is the data that you are using and what is the problem that you are solving for you to get value out of that data. And as you were asking before about FinTech innovation, I think that a lot of the innovation that is happening in FinTech is really how the technology is enabled with data. So how data is being used to make process faster. So how come you can do the onboarding with a FinTech company in just minutes, where with a bank you were doing it in weeks. You know? So all of those things, all of those processes that are accelerated and are giving a completely different experience to the client, at the end of the day, the underneath or the common denominator that you see is that it's a clever use of data, be it from a compliance standpoint because you are integrating some capabilities, or from other sources of data that allow you to accelerate the process and to create a better experience.
If I can add to that, though, I think that there's still further opportunity out there. So, if we use machine learning around, when we're offering credit, for example, to predict how much someone can afford to pay back, when they will pay it back, and start looking at similar businesses in similar geographies to see their profile and their seasonality and the rest. And we've only just woken up to whilst we've been running this and having the database build its own learning capability for some while, just woken up to the fact that actually giving that data back to the customer, especially a customer that runs a business with 3 or 4 staff, and telling them what we expect them to be doing in October or November or December next year and why we expect to do it, suddenly justifies way beyond the product that we've been offering. And so, again, it's having this holistic view as to what you can do with the tools that are there, I think, is where the most innovation will come. As you say, we've had mobile telephones and we've had cars for a long time. We've had taxi drivers for a long time. And then someone connected a taxi driver with an app and a phone and Uber with a Google map, and the things come together. So this aggregation of what's already available still needs to be exploited.
Yeah, I agree. And I guess, Salvador, you touched on open banking and the fact that that's just going to proliferate the access to information to provide those federated experiences that enrich, I guess, the decision that we can enable consumers to do. Wendy, it strikes me that when we touched, a couple of people mentioned data scientists, but you're a psychologist from background, is that true?
Yes, that's right.
So what's the balance of data scientists versus psychology versus, I guess, other skills?
Well, there's definitely an overlap, but it's specialising in people and how they behave. And actually, to that conversation then, I think there's phenomenal tools. It's combining in interesting ways. But so I was at a conference recently about it's human factors technology. It was health, and it was looking at the problems. There's a point to the story, I promise. Alzheimer's and keeping people in their homes. And there was how do you keep somebody in their home when they could get up in the middle of the night and walk out the front door? And everyone's instantly jumping to, well, you can have mats on the floor that will send alarms at the minute they get out of bed. You can have locks on the door. You can have cameras. So you've got privacy concerns already because somebody, being watched in their home. And actually, all of these technology still doesn't stop the person going out the door. And it was the family, actually, of a mother who came up with an ingenious solution, which was an understanding how Alzheimer's works. There's many forms of it, but it's not your long-term memory that's affected. So you can still remember things you've learned. Short-term, that is a problem. So you get up in the middle of the night, you don't know where you are, you walk out the door. So they put a sign up on the inside of the door every night, and it was a gent sign, because she knew, I don't go through a door with a gent sign on. So sometimes you may have phenomenal technologies, but you have to understand what the problem is. And actually the problem was not keeping her in, it was stopping her going out the door. And that's where actually, when you think about behaviour and understanding what the problems are in organisations or for consumers on the street, you have to really look at it from a number of different angles and understand that people don't do what you expect them to do. Look at Brexit, look at Trump. They don't. And there's many reasons for it, many driving factors. And in financial services, actually, I would say there's legacy technology that has thrown up millions of false positives, which have meant the banks have hired huge numbers of people. And it just shows you what normal trading looks like. So actually understanding a job, bringing domain expertise, bringing in behavioural science, how does somebody do a job? How do you look in the data in the right way? How do you then use machine learning to give you a better solution, to give you actually where the real risks are in your organisation? You'll get a better solution at the end of it. So that's why we come at it with a different angle, with putting the behavioural science in as well as the data science. You have to actually, and there's also financial expertise, you have to have domain expertise in the area you're looking to, whatever area that is, consumer use, whatever it is, you need to have domain expertise. If it's people, you're analysing, understand people, and technology. It's a combination of all of those things.
Agreed. I think most of our answers thus far, and actually most of the day, I think, has been very focused on sort of consumers. What about businesses? So how does data analytics and looking at behaviour affect, I guess, the FinTech environment for business to improve business banking in some form or another? Salvador?
I think that probably one of the differences between consumers and businesses is that for businesses sharing their data, they feel it's less intrusive. Yeah. Because if sharing your data allows you a better access to products that you need straight away, you are more likely to share the data. And that's something that with the products that we offer, we've seen very rapidly that when we are offering lending products, it's very easy to get the clients to open up and share all the data with us. Then at the end of the day, I think then once you have that data, that's a key difference between consumers and businesses, that it's easier for you to capture the data. But then it's what other data you need to solve a problem. Because when you have businesses, those businesses are interacting with other businesses. So it's about transactional data that you have in your own platform, or is it about shipping data that for us we use in our case that you can get from other sources. So I think that then the problems that you are solving may be more complex, and it's not about having the access to the data that you can get from the client or the business in that case. It's also about understanding what other data sources can allow you to solve the problem. And there's a lot of things, for instance, on businesses, you can look at their website, what is the information that they have in their website. You can look at the payment profile or how quickly they settle the transactions that they have with you. So I think that with businesses, you can solve many more problems, and you have more data sources to solve those problems. But I think that we are still at the very early days of the journey.
Well, and I was just about to say that, just in terms of banking and the banking fraternity, in terms of how we service businesses, especially the small, medium enterprise rather than large corporates. Again, we have just as much data to help those businesses thrive, get better, get more out of their money, or spend less on debt. But how well do you think they're serviced from the existing incumbent banks in terms of leveraging data to truly enhance the business?
I mean, I think that's for me, that's the great opportunity for the FinTech community, in the sense that banks have a lot of problems with their legacy systems. For them to really have access to their data, to have their data on a clean way and be able to manipulate and get value of that data is a pretty complex problem. And probably when you look at their technology roadmaps, they have a lot of fights that they need to fight in the short term. So that's not a priority in the short or medium term. When you look at companies that are being built with new technology that put data at the core of the strategy very early on, that allows you to have that data and to manipulate that data, you're in a much better position. So, and when you see propositions that FinTech companies are bringing to the table that are superior to the ones that banks are offering, in many cases are leveraging data. So coming back to your questions, I don't think that banks are doing as well as they could when it comes to leveraging their data, mainly because they can't.
Yeah, I'd just add to that. Actually, we met with the global head of analytics, one of the major banks, who said that her data's in 8 different warehouses. So her first job is actually to work out what's where and how she's going to combine it all. Whereas You were talking earlier about the size of your bank compared to the large banks. You've got two challenges. One, the legacy of data and how do you pull it together, and the team of people you're going to have to pull together in order to deal with it. You need really good business drivers to actually have the motivation to go and do that and get the buy-in. You've clearly got to get through a number of layers of people to get the buy-in as well. So just the cycle to go through to make a decision in these large organisations is long compared to perhaps delivering a service to a consumer who can make a decision because it's only them making the decision. I think that's a key difference. It's not that they don't want to. I think the other challenge then is, do they want to? Are people like them doing it? Because it is huge time and effort. Who's going to be the first one to do it? Who's going to be the leader in the pack? And that, this is again, it's behaviour. Are people like me doing this already? And that's where something like the regulator that comes in and says you're going to have to do this helps innovation, helps drive that. And I think the FCA is a real leading light in this field in how they're looking at it, encouraging innovation. But those pressures are only slowly coming elsewhere in the world, and it's only slowly seeping into the banking environment now. We're seeing huge changes in the last year, but it's a slow process in the banking. The opportunities are there, they recognise it, they love having the meetings. You have to also recognise they've got huge challenges to do it.
They like meetings, that's for sure.
Yeah.
Yeah, I spent 8 years with a couple of rather large banks with more data than we know what to do with. But the reality was, I don't think there was a single meeting that was around what value that data could give to our customers. It was only about what value could it give to us. And there is a bit of a stumbling block as to who makes the first move, who declares and who discloses, and actually comes up with a solution that their customers see value in. Because, especially in the small, medium space, they don't have data scientists or people that understand what might be out there. They have business problems. So someone needs to step up and say, there are some solutions for your business problems, example what they are, and start to bring people into that marketplace. So I think Wendy's comment around who moves first is really key.
Yeah. So let me hand it over to the audience. What questions do you have in this field? No questions at all. Have we answered them all? Here we go.
How worried about the possibility that with increasing data to make it easier to lend to people who are better credit risk, there's also a risk of social exclusion from the exclusion of people who don't meet the necessary criteria?
Who wants to take that one?
I started off with, I think it gives us an opportunity. The morals of the company are ones that I'm not going to answer for anyone else in the room. The opportunity is to do both, absolutely. So are you willing to use data where it's not profitable for your business? Obviously, no one goes out to do something that's non-profitable, to actually make a loss. That's not an objective situation in there. Data is dangerous in that own way. And I think that what we can see in FinTech is that people will choose the niche in which they feel they're best. And those underserved markets will get served. They are already starting to be addressed. There are people that set themselves up to target those unique marketplaces and make them work. That doesn't go for all of the legacy providers that are out there. So tendency and balance for me is, I think it's going to unlock opportunity. It doesn't mean that existing providers will all become balanced moral providers of service across every sector and every segment of the marketplace. But someone will step in. It's one of the challenges to the legacy banking environment today, which is the first place for FinTech to evolve is in a place where it can cherry pick profits. It doesn't want to set up an infrastructure. Mobile telephone companies do not want to put wire and copper in the ground. They rely on BT to do that. Last mile deliveries rely on Royal Mail to take stuff 400 miles from one end of the country to the rest and then take it the last piece. Traditional banking could easily end up just like that as far as I'm concerned.
Other views?
I think I totally agree with that. Data makes the problem easier to solve and to break. So I think that when you open up data, you have existing providers that will be able to serve segments that are close to where they're operating. That doesn't mean that they will be, of course, serving segments that are not profitable to them, but that will identify the segments that are not being served, and other companies may come and service those. So data can only help solve the issue.
Thank you for the question. Any other questions?
Yeah, should an enterprise business hello? Should an enterprise business recruit and build out a data science team from the outset, or should they be using sort of smaller providers initially to test the water and understand how much value they can get from it, and then build a team and resource out from there?
Okay, let's go. How did you guys start out on the journey? Did you hire scientists themselves, or did you outsource?
I can answer that one, because we have done both. So we started with an external company that could get our data and bring value to us. And at the same time, we started with our own team, trying to leverage the data. And what we found, for us, we're a B2B business, is that the knowledge of the business and the knowledge of the problem that you are solving is so key that it's much easier to make it work with an internal team. At the end of the day, every company is different. In our company, we truly believe on the value of data as a strategic advantage, and we really put data at the center of the business. That means that we have our data team that is interacting very closely with our risk team and with many other different teams, and they really and truly understand the business. And that means that when they are solving a problem with data, they can really go much faster, because the way you define the model, if you understand the problem, is much easier. So for us, it has worked much better with our internal team. But also I think that it's not only that, it's also that you really need to believe on the value of data and to put it at the core of the strategy.
Yeah, I think we have two different areas. One which is around analytics, which is part of our product. So I'm going to exclude them from this at the moment. When it comes to the pure data analytics side, our first scientist, as she liked to call herself then, and she's proven since, but joined us when we had 35 people. We're 350 people now, and we have 15 of these people in the team. The crux for us is that actually we don't know what we're looking for, and that's what their job is, to find out the new data. And one of the tricks that we've been using in most recent times is that to try and turn them into a profit center. So they identify trends, they identify data, they sell it to other departments in the business to justify their well-being and their existence, if you like. That's why the team's getting bigger, because they keep buying more, selling more internally.
Wendy?
So I'm co-founder, chief behaviour scientist, and so what is a psychologist? You're trying to measure behaviour, and that's why FinTech actually is perfect for us, because it's a huge amount of data which gives you a baseline measurement. Then you can look at how has it changed? Has it got better? Has it got worse? Is there no difference whatsoever in what you've done? So it all starts. You've got to understand the domain. I completely agree. It's got to be having domain expertise. A business psychologist is understanding people at work. So if you're designing tools for people at work, you have to know how to take apart the cogs of that job and understand it in order to design technology. Then you use the data as a measurement, and that's where a combination of behavioural science and data science coming together with the mathematical modelling is absolutely core to understanding if you're going to deliver a product with impact, which is what we should all really be about. So understanding the problem, first of all, the domain expertise, absolutely also have somebody who understands the data and has got it in the right shape from the beginning and has got the right way to measure from the beginning, I would say is key.
From an Atom perspective, we do both, and I think you have to as a brand new business. And the reason I say that is we believe that data is a massively important core competence that we want to grow. So we hire data scientists right from the get-go, but we have no data. We don't have any customers when we started, so there is no data to actually mine or do anything with either. So you have to then buy in services, so things like our EID&V processes, our anti-money laundering, we're buying data through the bureaus which is a source of data, right, to make those sort of decisions. So you have to do both, because we don't have it and we need it. But directionally, we'll be doing much more internally for our own teams. Any other questions? Yep.
Martin Dowell, Trust. Lots of fintech companies are relatively small for the spaces they operate in, and obviously you have lots of very valuable, interesting data. Are any of you worried that that might make you juicy and relatively easy targets for cyber criminals? And if so, what are you doing to protect yourselves and your customers against that risk?
Right. If we're not worried, then we're not awake. So certainly we have data that's in there. I think that we're particularly in the card payment space is a core area of data, and that has its own ring fences and standards around PCI and the rest. But there's nowhere for compliance for being complacent in this space at all. So I think it's a concern. I think I'm more concerned when we start getting requests from whether it's regulators or authorities for us to ship large amounts of data to them. I trust them less. They can't prove to me that I should trust them more. And I don't know what they're going to do with it. So it's actually, you can have a bad month in sales or a good month in sales, and they just move the needle a bit. You have a data loss, and the needle's just dropped off the chart. So it's the first thing in the morning to deal with.
Others? Salvador?
No, I fully agree with that. I think that as soon as you start manipulating data and accumulating data, and as soon as you have new companies that go through a growth curve that is very interesting. So you really need to ensure that your systems are well prepared when the company is growing. Because as soon as you hit certain numbers and your brand is out there, you know that you're going to be attacked much more. And by then, you really need to be prepared. So it really needs to be a core competence. I think worries us all.
Certainly from Atom's perspective, I couldn't agree more with Stuart. We are a digital-only bank. It is all data. And therefore, if we didn't have an absolute focus on security in all its guises, all sorts of aspects of financial crime from day one, we wouldn't have opened the doors. Even the launch of the product strategy was in line, actually, with just validating some of this stuff. So we launched with fixed-term deposits and business lending. And that was specifically because we wanted to absolutely validate in the public domain, knowing we would get attacked because you're new to the market, with a product that was very, very safe to launch with, right? So even that shaping of actually what we launched was partly, not just wholly, but partly to do with just making sure we're building this in an incredibly robust way right from the word go. It has to be done. If we have a problem in this, guys, it'll destroy the business in the early years for sure. You just can't afford it.
I think just one extra point on it. The growth cycle that Salvador's talking about it's very easy to not prioritise something that doesn't just add an extra dollar to the bottom line in the short term. But I also think that it's very dangerous when we look at the digital world to focus on it. So you can do the best technical job out there that you can possibly do to stop the outside coming in, but there are still more and more people that are keen on this data. I can quote an example, but not the background of someone being offered a six-figure sum in sterling to take a USB key, fill it with data, and walk back out of the office with it, an employee. So it's not just about how solid your web front is, for example.
I'm just going to ask the panel just one last question to finish off with, and that's, if you could give one piece of advice to the audience in terms of what you would do starting out, or what would you do differently now you've learned so much, what would it be? What piece of advice would you give? Salvador?
Sorry, the first or the piece of advice would be to start earlier on the data journey. I think that we strongly believe that data is a key competitive advantage. And over the next few years, the companies that are leveraging the data will be able to have better products than the companies that don't. And for you to be there and well positioned in that journey, the sooner you start the journey, the better. And when you start that journey, you need to start it with confidence and really believing on what data can bring to you and that strategic value of data. But the piece of advice would be We are going to have more and more data over the years. The world is getting fully digital. The tools to manipulate that data are out there, and they are getting easier and easier to access. So it's very difficult to think that your business cannot benefit from that. And if you can see the value of data now, that you will see more value over the coming years. That's a very strong trend. So the sooner that you start the journey and positioning yourself with confidence, the better.
Yeah, I think those comments are all very strong. I would personally say, don't start with the journey, start with the destination. You've really got to put something on the table, slap it down on the table and say, this is where we want it to be and what we want it to be like in a period of time in the future, let's say 18, 24 months if you want to do, and then map out the journey necessary to get you there. So if you want to get there, don't start where you are, is probably the golden rule. Bigger and older the business, the more and more that rule should play fact. Also, don't just wait until you think you have a suitable repository of data, as Stuart was saying. How you move forward is you're going to start setting that out from the first or second day. So if you just wait and gather data and see what can I do with it, how should I deal with it, you'll be slower than most of the other players out there.
Yeah, I think actually, where do you want to end up? We do a thing in the company called a pre-mortem, which is you kind of envisage where you want to be in 18 months' time, and then it's all gone belly up. And then you think about all the reasons why it could have just been a complete disaster, because actually that helps get the thinking going about what could go wrong and what haven't you thought about, and people who've got niggling doubts around the room can then chuck them on the table, and then you can plan properly to deal with it. But you're going to have to be prepared to deal with, were you talking about the FCA surprising you with how long it was going to take to get regulated? It's having preparation, thinking through the surprises that you might get along the way, but having a focus on, well, what's in it for the end user of this thing? Because we are a great team. I'm sure all of these are great teams, but actually, ultimately, you've got to deliver something that's of value at the end. So, what is that, and why are they going to want to take it, and why won't they take it? Really importantly.
My view, just to finish off, is that I guess I started by having a show of hands, and I think about 10% said that at the start of the journey, and about 10% said they're quite a way down the journey, and I guess everyone was in between. My view is we're all at the start of this journey, and it's not because we haven't been trying. It's because the technologies, the data, the consumer behaviour, the optionality is changing so rapidly. No matter how fast you're going, you're probably only just staying up with it. So we're all still pretty much at the start of this. The opportunity is absolutely vast if you actually think it through. I'd love to thank you, panel. Thank you very much, Wendy, Stuart, Salvador. Thank you very much.